From the Wall Street Journal, America's apartment buildings are getting bigger and taller. There's a pretty good overview article on the rise of high tower apartment buildings, and it's part of the theme we're seeing in regards to a bigger focus by developers on high density housing, often aimed at upper incomes, so you can get more dollar per square foot in terms of development costs. With inflation, with labor costs, we're seeing a bigger focus from developers in commercial retail space on anything they can do to get more value per square foot. Per the article, more new rental apartments are coming to the market than at any time since the 1980s. Really big buildings are a major reason why. Apartment developers are creating soaring properties with more units. They have seized on the willingness of some local officials to relax zoning and other laws and institutional investors to bet on smaller cities, enabling developers to go bigger than ever before. U.S. cities added more than 2,900 buildings with more than 200 apartment units between the years 21 and 23. That's 17% more than were built from 2018 to 2020. While office towers have typically shaped the American city skyline, builders are now pushing apartments higher into the sky. High rises were just 2% of the new apartment supply during the 1990s, but rose to 14% in 2022. The bigger approach to multifamily developments reflects the evolving economics of the business and the dynamics of the current housing market. Rising construction and other costs mean that developers often need to build more units to be profitable. For years, they have been designing smaller apartment units, allowing them to fit more into each building. The average square footage of a new apartment unit fell 6% from 2013 to 2022. Lack of available land is also causing taller buildings to sprout. In Dallas, the scarcity of 4-acre parcels typically need to build the common entire block apartment buildings known as the Texas Donuts has led more developers to build upward on smaller lots. Most of the large apartment buildings going up now were planned at least a few years ago when rents were rising fast. Rent growth has since slowed in most of the country, but steady tenant demand makes multifamily development still appealing. Record home prices, limited inventory of homes for sale, and steep mortgage rates are keeping relatively high earners in rentals for longer. This is an important point supporting the high end of the market despite strong supply coming in. Occupancy rates for urban apartments have come down, but remain at levels considered high in most cities. Some downtowns have added corporate jobs and new residents, despite continued uncertainty about office markets and remote work. Quote, when you have larger scale projects, you can have more amenities. And when you have more amenities, you win the amenity war. In previous years, an urban apartment boom might have been dominated by condominiums, not rentals, but condos are now viewed by many builders as riskier propositions and can be more difficult to finance, developers said. Today's higher interest rates also mean a declining number of people can afford to buy condos, buoying demand for rental units. In Chicago, Related Midwest plans to build 2 all-rental skyscrapers, one reaching nearly 900 feet in height, at a downtown site where condos were once planned. Quote, Chicago was almost exclusively a condo market pre-2008, said Kurt Bailey, president of Related Midwest. That largely changed with the real estate crash. Hey, hope you enjoyed this article. Give us a thumbs up, and if you haven't already, subscribe. Thanks a lot.